couple seconds because
Oh, I just hit it.
okay. It doesn't matter.
Here we
I
go.
was just going to say it takes like the YouTube stream is a little bit behind. I don't think it's quite a minute, but it's a little bit behind, maybe 30 seconds or so. And I think we need to end the stream manually. So I just wanted to do that and make sure. Okay, it looks like it did officially end. So I can
see that we're live with the TSU Trading Show. How to gain traction as a trader. I'm glad you guys are here. We just wrapped up a group coaching call and it was spectacular. I mean, it was really good. If y'all missed group coaching, that's also on YouTube. We did that live as well, so you can go watch that afterwards. But we're transitioning now to invite our friend Scott Landers back in. We're thinking about making Scott a permanent fixture. Like, I had kind of thought of this as the Josh and Chris show, but Scott's just such a great guy. I'm going to share a little bit of Scott. He's blowing up my phone all week. Like, hey, do you guys need help on the show? Do you need help on the show? Do you need help on the show? Can I be on the show? He didn't want to ask, but he was asking. He's like, I really want to be on the show with y'all. I'm glad you're here, Scott.
I appreciate that.
Oh, I got to turn the hat around. That was a joke. Last class.
No. Put it back.
This is more serious. So I didn't get the memo that we're all dressing up today. I'm like, it's Thursday. It's group coaching day, and we're all going to be chill. So let's do that, and I'll drive Chris nuts the whole show.
Yeah, the only way that could be worse is if you had a mustache. You shaved the beard.
I am not proud of myself, y'all. So it's supposed to be on my birthday that the mustache arrives, but we were so busy with getting a house on the market. I haven't been able to get into my guy. I got a guy, and I'm gonna just have to hack it off myself. All right. Hey, let me do a very quick recap because I just talked about this in group coaching, and you can go watch it there. I want to give my 2 cents on the market because it's going to be right. And when we look back, it's going to make me look really good. So let's just get this out there into the internet so that we have a recording of it. This is a very broad, everybody say broad together with me, Fibonacci zone. We could get a lot more nerdy and specific about this. I just haven't taken the time, and I don't know that it's necessary right now. And the reason I bring this up is, the market is still making lower highs as we're looking at this. Could it go higher? Sure. Could this not end up being a lower high? Sure. But right now, with what we're given on the right-hand side of the chart, this is lower than that, and that was lower than this, and so on and so forth. So we're making lower highs and making lower lows. If you take out the whole little, Ukraine debacle, which there could be an argument about that. If we looked at this on a line chart, then, there we go. Problem solved, right? Lower lows, lower lows and lower highs. Just disregard the candlestick chart. And so by technical definition, we're not necessarily out of this downtrend. Now, I don't think the market is crashing. I've not seen any of those signals yet. I don't know that Scott or Chris are forecasting, Armageddon in the stock market. If Russia nukes California, things could change, but I don't think anybody really believes that's going to happen. Certainly the market has not bought into that narrative quite yet. And we're at a Fibonacci zone right here. So this is a classic pivot point in the market. The market needs to make a decision right here. But what I don't want you guys to get tripped up on, this is why it's important, there's a very good chance that we could pull back a little bit before we continue on. And don't let this pullback be a head fake for you, and you just go all in bearish thinking that we're going way down. And you get, what if you're short selling, you get a margin call, you get squeezed out of those short trades, because I believe from what I'm seeing now and just experiences with how the market has behaved after other surprising news like Ukraine, I believe we're going to come back. People that rode this move are either A, going to put some cash in their jeans, so there's going to be a little bit of selling pressure, or B, the institutions are going to shake out some of the traders that are up here, try to get some people to bite on some short selling moves, and then BTD, buy the dippers, all come in, and they're buying stocks that are on sale from where they were just a week or so earlier. So don't be surprised if we don't take off like a rocket ship back up to 480 this little dip, that's going to be a super cool opportunity. And for those that are in foundations of trading right now, it's going to line up pretty well with us talking in the next week or so about short selling. We may try to scalp a couple short trades as it comes back down. I don't advocate this at all as a trading strategy. I don't try to grab these little dips and retracements, but it'll be good for demonstration purposes, and hopefully we'll make some money and put some cash in our jeans there as we.
Yeah, you know what's a great way to not worry about whether the market's going to pull back a little bit first or not? Have both kinds of trades. Don't just have all bullish trades. Have some trades that will make money if things go down, or whatever the situation may be. Have some trades ready to go for when that happens, and then you don't got to worry about it. I will never stop professing that. I'll never stop prescribing that. I've got trades that will make money if the market goes down. I've got trades that will make market if the market goes up, they'll make money. English is hard. And like my portfolio right now is more bullish than it is bearish. Like if you looked at my delta in my portfolio, it's quite positive. But if things were to go down, I'm not just sitting there watching myself lose money, right? Like I've got trades that will make money when the market goes down. So I don't care if it's going to pull back a little bit first before it goes or anything like that. So have trades that can make money no matter what the market does. And that's basically what we teach here at TSU. You don't have to figure out exactly where the market is going to go. Like, yeah, that helps for sure. But just in general, if you have bearish trades and you have bullish trades, then you can make money in either scenario.
I think that's so smart. Let me wrap up here, Scott, and then I'll come back to you. That was a new way of thinking for me. And it's funny where we pick up knowledge and you're like, that makes so much sense. But it's about 2 years ago when I talked to Chris, and I was, he was feeling us out. We were taking a look at him and his trades, and he was explaining this hedged strategy. I'm like, that makes a lot of sense. And I started adopting it. And actually, my account performance went up exponentially when I adopted that mindset towards trading. It's maybe not as exciting in the moment, but the equity curve is much more stable and much more consistently up and to the right. What were you going to say, Scott?
Can you mark on your chart another box on January 26th, since you have that one marked? Do you mind?
Hey, I'm going to give you control of the chart, and you can mark up your own dang chart.
Hang on.
You like Scott's Fed box there?
That's the one I want you to mark on yours, though.
Oh, it's
20.
there.
No, can you, on the 26th, January 26th.
January 26th.
January 26th. Put a box around January 26th.
Just that whole candlestick?
Yes, please.
The wicks or
the whole box? Everything high to low. Just because you have this post is the reason I bring it up, because that was the January Fed announcement. That's how I want you to mark it. So
can't see. I think that's close. We may have to come back and adjust it a little bit. They put that little dot right over. I know what I could do. I can just move this. There we go. Okay. Good. Tell me what I'm looking at now.
So the box you just marked was the January announcement, and that's the March announcement. So think about it. You have two Fed boxes now. Do you notice the entanglement of price in these two zones? It's not like it's way up higher, right? So you're getting a sense of what Wall Street's focus is on relationship to two boxes now. And if you'll look at yesterday's price action, where did it find support? The top of your box, the top of that date. This is how you can bring the Federal Reserve, the world's largest hedge fund, into your chart, into your trading, and identify key levels. And we could also subdivide that and put a 50% and all that, but just to keep this simple for everybody. It's a really powerful way to look at where Wall Street is relative to, based off of what's going on with the Fed. A lot of power with what you're looking at right there, guys. Once you start to see this, I've actually reached out to a programmer I've dealt with for a long time to see if we can't finally get this where I want it. But that gives you really neat place of support resistance to play with, guys. And you're seeing the boxes he's got a mark. That's your January announcement. There's your March announcement. So this gives you a way to look more deep into Wall Street rates, the whole macro picture just based off your chart. If you take it to a deeper level, more macro, you would mark each of those weeks. If you want to get more granular short-term trading, you would actually go into that 15, 30, 60-minute swing, the impulse high and low around that, like on a 5-minute or 30-minute chart, something like that, if you're a little more active inside of that. But that right there will give you some serious horsepower, guys.
What do I do with this information? Like, so we shot out of the Fed box and then we came back down below the Fed box. Is the Fed box acting like a rubber band in those circumstances, or what do I do with that information?
In this particular case, yes. And if we were to go back and look over a much longer history, you would find a lot of times where it's just stair stepping up above it. So they had the announcement, there was some noise, right? And then it would get above it, would stay above it, might retest it and keep going. And you get the next, bit of information, and it was another box in the next, meeting. And so you could literally see it. Well, once it stops stair stepping up, bells and whistles should go off of your head like, oh my gosh, for the first time in, 2 years, we're actually spending time below that. Well, if they go below one Fed box, let's just say it's over a couple of years' time, and there was one in December, and we finally went below it. And if you look back left, price has memory, go look at the prior Fed box, you'll probably find it support. And that's just a general overview right now, but yes, absolutely, you can look at it that way. We could spend some time on this down the road. I'm going to try to do a little more detail of it, but I want you guys to see that at least. Does that help?
Yeah, it does help, and it's a whole new way of looking at things as well. I'm curious what the heck y'all were talking about in boot camp this week, because our email has been blowing up with people excited about that. What have you been sharing with those guys, and what are you guys doing in there?
Yeah, so for those of you that don't know, Scott Landers teaches what's called his traction apprenticeship, where he basically helps students get traction in their trading. And as a prerequisite to that, he has a boot camp that goes for, is it 2 weeks?
Mm-hmm. Yes.
Yeah, and that's basically to prepare people to take traction. And so that's what we're asking him about, because it's always hugely popular. Students love taking these classes with Scott. So let's find out like what he's been up to in there. This is the first week of boot camp that's been happening this week. So what have you guys been talking about?
One of the things we talked about, so for those that don't know, before we started to traction, which like I know at the end of the day, in the last half hour of the market today on the S&P on a 60-minute chart, we're at an inflection in price. Before I can get to teaching people how to find these inflections, I needed people to come through boot camp and say, look, I need you to know what basic trend is. I need you to know what basic support resistance is, what basic volume use is. People are like, oh, well, that's so simple. But then when I quiz people and I say, okay, tell me what the trend of the stock is and tell me what you would do with that trend, a lot of traders, higher percentage people want to admit, can't actually identify trend. And it's not a critique as much as you're putting real money, guys, a few hundred, a few thousand, tens of thousands, 6 figures in the markets. Well, everybody knows trend. There's not a common denominator. So when I go to teach the actual traction course, sometimes you might get lost. You're like, well, why is that trend? Because this is a simple way to define trends. So we're all on the same page. That's the point of boot camp, to bring people to the same place at the same time. And so we've covered basic trend. We just did support resistance, which is nothing more than basically trading levels. And that was eye-opening, as I got told by several people in class yesterday. And then next, we're going to talk about volume coming up. Most basic way to use volume, we'll go through VBOX when we do that. We're going to talk a little more about momentum. We're going to talk about some more psychology that goes with it. Some more support resistance. I'm going to teach them how to take nothing more than a simple set of pivots and actually create probably one of the best trend lines you'll ever create that doesn't require a lot of thought. So it's a packed 2 weeks. I guess about 7 hours of education, and I'd say it's pretty intense, but I think it's pretty valuable information. I wish somebody had taught me this when I was a kid starting a trade. It's just, that was the 1980s, and well, there just wasn't the internet and all these cool indicators we have now.
That sounds cool, especially the trend line stuff you're talking about at the end. I'm curious, can you go into a little more detail on specifically like the trading the levels that you were talking about, support and resistance.
Absolutely.
What kind of things are you talking about there? Can you show us some examples?
Sure, absolutely. So one of the things that we walked through was identifying basic support resistance levels. And clearly you could look at indicators that have boundaries, like a Bollinger Band, right? Some sort of channel mechanism. Then you can get into basic pivot structures. I always use the analogy that markets are either going higher or lower or to the right. Well, if it's going higher, where is it trying to get to next? So as Josh talks about, I talk about the price has memory, just look left. So what I taught them was I said, look, where's a cluster of data? And this is NVIDIA. I've actually been asked by a fund manager this morning about NVIDIA. And they're frustrated because, well, they want to be more heavily weighted into it. So I'm going to show you something in NVIDIA in just a minute for target levels if you want to know it. But if you look, if you back this up, and I don't do this in hindsight, if you just ignore from here over, from just this section right here, roughly whatever it is, the 15th, if you just look left, it's not hard to figure out where these clusters are. Oh, well, that's just basic highs and lows. No, it's actually where price stopped expanding and contracted, and then it expands. So basic pillar of technical analysis always has been whatever was once support, once broken, becomes feature resistance. So right here, and this is super generic stuff, right? If this was support right here, okay, in the future, when tested, okay, should become what? Resistance. If broken, retested should be support. Well, you can see when this one up over here, where's resistance? Resistance broken out. Where are we going to the next level? It's one elevator rod between levels. I have a concept called vapors, which is based on doing the same thing with just pivot structures. But it's much more complicated to create unless you program and you put all on your chart. The average retail person could, in my opinion of doing this for a really long time, and when I've done my newsletter over the years, it's one of the things I use to help people find targets. It's just like, look left. If there's a bunch of red bars or a bunch of green bars, realize there's probably not a whole lot of either buyers or sellers in your way. They're trying to get from one floor in the elevator to the next floor, to the next floor, to the next floor. Everybody in an elevator and some kid pushed every button. You're like, oh, shoot me now. And then sometimes you get an elevator, you go from 30 down to 20 and you don't stop. That's how these giant green and red bars are, or a series of them. So for the average person, you can test this out, and we've done it. I've done it with the Traction group. It's real simple. In fact, it's Traction 3 group that said, please start here when we go through boot camp for everybody. That's how much value they said you have to start here. So that's why I'm teaching the concept. It's not complicated. Look at a cluster of bars with well-defined highs and lows and realize when you go back to that level, this might be a place I want to think too short, or I might want to find resistance or use it for targets. It's very elementary. The problem is most traders are so codependent on indicators that they can't just read basic price and basic trends. So boot camp solves that problem, but this is one of the comps that we've been talking about. We spent 2 hours on it in real time. In fact, I documented out the IWMs, and I think it was NVIDIA in real time yesterday with it. And we watched NVIDIA just plummet, whatever it was. I think it was NVIDIA. One of those, doesn't matter at this point, but we followed the IWMs exhaustively. And so I don't really care what the symbol is. I tell students, take price off your right axis. Most people are trying to trade their P&L. You need to trade the chart, define a unit of risk for X units reward. Well, with this idea, you can clearly see where resistance is. And so we did that yesterday in real time, walking it through. And that's part of that's the boot camp experience right now. When we get to Traction, we're gonna get to a whole lot more involved level. But if you're new to trading, or you're new to this, or you're seasoned pro, the ultimate goal is to be able to trade without indicators. They're training wheels so that you can just go to price and trade from one floor to the next floor. So I don't like bullish and bearish. I say bullish is Josh like, ooh, Scott said bullish, let's buy. I'm joking. I say bearish, Chris like, ooh, let's sell. No, you don't want to be like in Las Vegas with all the bells, whistles, and lights. Just focus for just like a minute and say, look, do I think we're going from support to resistance or resistance to support? It takes out the emotion. Does that help? Does that enlighten everybody a little bit?
Yeah. Now I have a follow-up question then. So when you're talking about going, from one level to the next, my brain immediately thinks, well, like, what if there isn't another next level, right? Like if we look at like Chevron, for example, right? CVX. So another shameless plug for Power Trader. This is one that we were talking about when it just broke above 140. And when I look left, like the stock's never been above 140 before, right? So how are you finding levels that you might be looking to target? Like, are you using fibs to kind of project up, or what would you look for when there is no price to the left?
I will use fib projections. I will use doubling techniques that we teach in traction. I will use geometry forecasting, and I'll show you guys, well, a slight version of this in a second with NVIDIA, but there's ways to project out. Then you can look to the right-hand side at the price and look at major psychological numbers. And those are some basics. When we get more granular, if somebody wants to get more granular into that. But a lot of times I'm looking at that. Pretend like on Chevron right here, and I do this all the time. I've taught this for almost 20 years. If this was my structure and we went above this, I would just take this breakout, this box, and use it to measure above it. I would take the whole box, stack it on top, basic geometry, and that would give me a target level. I'd also cut it in half and look in the midpoint, and that would give me two simple targets to find. It's very effective. Very, very
I love
effective.
geometry. I
It's
use the box all the time.
it's like, even if you go back to this base structure here, right? This is not really big. But if you get in the idea in your head, you can see where most of the bodies are touching, right? We're just kind of getting close, okay? Let's just give you an estimate so you're not just letting your emotions take over, okay? Well, now take that. You can see where it stalls out. Now take that box and just a simple doubling of that, because what you're going to find is stocks tend to do what? They tend to double, okay? So what do you see as it happens? See the low sets? And you take this range and do the exact same thing again. Take another box of this and double it out. Stocks tend to double and then double again. So if you imagine a price of $8, where do you think it's going? 16. You get to 16. What's double 16? 32, 64. The universe is a doubling rate. The same kind of stuff right here. See it? You'll see it over and over and over again. And by the way, if you want a little trick with this, I've taught this every traction. I did it for clients. I think it was coins, a couple of IPO stocks. So if you're new to this or you've never heard of this, you might want to write this down. They double from the lows and they cut half from the highs. So go back and look at your stocks that were IPOs recently have sold off. AI comes to mind, coin comes to mind. So let's assume the number is 100, divide by 2, you get 50. Hide and watch what happens at 50. Okay, if it's 150, go look at 75. And if it falls apart from there, go down and divide that by 2. So let's just say half of that was 70. Go look at 35. It'll blow your bloody mind. It's the reason I knew with Facebook at 17. This is way back. If you imagine Facebook was $17, we were looking at some analogies then and knew then. I don't say something like, oh, you didn't know. Actually, I did, because a buddy of mine who does geometry is like, 17 is the area. And I'm like, and sure enough, that was the last time that area she was there. These concepts will resonate. Again, you cut half from the highs, okay? You double from lows, and you double and you double and you double. You'll be blown away with just that, how you can target really well. You get too many doublings, you're probably topping out. 3 doubles, I pay attention for a major top situation at that point. And again, fib extensions, great tool. Does that help? I know it's a lot in a little bit of time, but those are real simple, practical tools you can all do, and I use them and I teach them.
So strategically, are you reducing position size at each of the doubles, or just raising stops, or what?
Depending on how vertical it's going, okay, depending on the speed in which it happens. We talk about slope and speed and traction because it's necessary. Depending on how fast it's moving, if it was like GameStop was, then yes, as it doubles, you're taking and you're raising stops behind it. So you're taking some off and you're raising your stop. And what I do typically is I go to, let's just pretend it had hit this target right here at the top of this box. I would move to this low. It's why I call it a tailing stop. Most you'll think of it like a chandelier. Gets this point, raise low. I'm a big monster believer in taking profits at targets. And the people that I've worked with that I would let trade my money a day are very target structured people, but their portfolios represent that. And that way you're taking some off. If Josh's objective was to go to Costco to buy something for the family, he went to Costco, he bought that, he came back home with it. He didn't buy the whole store. And most traders, that whole FOMO thing gets in, so you never take profit, and then it goes against you. And no, I can't get out now, but you missed your opportunity. And if you're an options trader, I like targets because I know I'm ringing the cash register. I'm taking some off as long as you have more than one contract, and let the rest of it run. Let's play at the house's money if you can get to that point. Does that help?
I just talked extensively about that in level 3 foundations this week. There's some interesting science around why we do what you just said we do, where people don't want to take cash out of the market. And spoiler alert, we are actually, as we're more likely to get a dopamine hit by being uncertain of what the outcome is than having the certainty of putting cash in your jeans. And just a really vivid example of that is, if you were to go to Vegas and every time you hit the lever on a slot machine, you got a dollar that came out, that would be exciting for like the first day. And then it would feel a lot like a job. Like, some people actually have jobs of pushing levers and dollars come out, and then they hate them. And they're like, I hate my job. And it's like, well, if we made it a variable reward, then it's a game. And now people get addicted to it, and they'll lose their entire life savings pushing this stupid lever. I may have accidentally said pleasure lever in class on Tuesday, and I regretted that. Anyway, so it's actually, the way that we're hardwired as human beings, it's more exciting to just let it roll, see what happens, than actually put the cash in our jeans. And I would also like to say, how big my family is, and I very well may have bought the entire Costco store. So I feel like that's an inappropriate analogy that you used. For those that don't know, they're here on the show. They're like, this guy's crazy.
Yeah.
We had 11 people in my family that all lived under one roof. And my wife and I have 5 kids, but then we also help take care of my parents, and I have a handicapped sister. And it's like Thanksgiving every day in my house. That's why I need to trade the stock market. My food bill, you just can't fathom what the food grocery bill is.
I don't want to think about it.
No,
I feel for you, brother. I do. That's a lot. Speaking of targets, if anybody wants to write these down. So this is all generated out of behavior today out of the markets for NVIDIA. And so I've got a fund manager who loves the stock. In fact, they're the whole reason I think I've become like just keen on NVIDIA as a day trade vehicle alone, because it's just smooth trading. And I think Kramer pumped this one yesterday, saying it's worth like 10 trillion or whatever it is, something like that, or the past week, I don't know. But here's longer term levels. I would focus on the yellows. Not that 300 is not a big psychology number, and 325, but this is geometrically defined. And so if you notice, currently, this is all done. This is not me curve fitting or whatever. It's just the way it works out. That trend line, there's a geometric that gets this, and you can see how well it took that before it fell over. And there's a little entry back here, but this will give you levels, and you'll see the bobble here, there. Well, those yellow ones, whether I go to daily, it doesn't matter at this point, are majors. So that rounding off the 279, 302, 300, 325, 326 right in there. But the interesting thing is, now you look left and notice the alignment of this. Notice the reversal levels with this. And so those are longer term levels. Again, this is not buy, sell, hold device. I'm not saying it's going there, but let's do something we've talked about. You'll take the high to low of this range, okay? And just let's use the bodies. This is what I call the tighter or looser of two. What does that mean? You ever seen a range that's well defined, the bodies, but then the wicks, the tails, the shadows are far above and below? Well, you can measure the high of that as a box or just the bodies. I go with the bodies, so I call it the tighter of two. So that means my target is the tighter, not the looser being the taller part of the box.
That's a good way of explaining that. That's a really good way of explaining that.
So take that box and then stack it up basically where the breakout levels, give or take. Well, that lines up pretty good to here. Now I can take the midpoint of that. Now, I'm not telling you it has to go there. I'm trying to give you simple ways to look at it. Now, if that box lines up and you take your fib extensions, retracements, and you see something in there that lines up, now you're getting confluence, guys. I don't want to have 5 billion things in my chart because your brain just goes poof after 3 usually. But If you see the alignment, then you can mark and say, I know that 297.06 or whatever it is some major level, because everybody loves fibs. They like the geometry, other things on there we can get to, and you use that data. And that gives you a longer term level. Okay. It shouldn't surprise anybody if this stock struggles a little bit here up to the high of that bar. Okay. Because that's your little waterfall. I teach what's called waterfall rock walls. Why do you think when this fell apart over here, it moved down so easily? Now, where did it move back to? Again, everybody can do this. You don't need any kind of special platform to figure out that that's a cluster. That's a consolidated cluster, like 5 o'clock traffic. Well, where did it find support? And people say, oh, it's hindsight. No, because I actually mainly do this and I proved it in real time yesterday. It's like everybody can go do this. You just have to take the time to do it. And if you can't tell there's consolidation, why are you wasting your time with it? Like, it should jump off the page at you, right? So again, this gives you some levels to play with. Yes, the stock's super strong. Where will it go down the road? Who knows? But at least you have levels, and if you're in it, these will give you some levels going forward. So I hope that's helpful for everybody, but it's just super simple ideas.
If I'm willing to time this as a swing trader, and I don't need to get the bottom tick necessarily, and if we're looking at about, where we cross over the New Year's 22 there, that cluster that you pointed out a second ago, where you said it could run into some challenges, which I agree with. Without giving trading advice here, which we're not trying to do, like, do you just buy into that zone confidently and like hope it goes through, or are you looking for it to stall and that's a pivot point and then you buy on the breakout? Or like, help me make a decision with this information now.
All right. So
to me, that move that we just completed is super aggressive, and I'm like, to me, it would feel like it needs to relax a little bit before I'd be comfortable buying in.
Agreed. Now, could there be some sort of news event, catalyst, black swan, anything positive, negative, any stocking point in time? Yes. But if it can get to this level, there's not a lot of resistance necessarily between this run here, and then it gets to issues. Now, I want to get to his answer, guys, so bear with me here. If you like, again, the stock is up, 24 points. It probably is like a $15 ATR. So it's excessively up. If you like chasing, I don't. I will wait for a pullback. If the stock is going to go appreciably higher, then you're going to get pullbacks, healthy pullbacks. We talked about this in boot camp just yesterday. You should expect healthy pullbacks. You get the pullback, let them pull it back, find a low risk point that you can define, maybe midday, like we talk about buy lunch at TSU, and then come back in and enter it. You don't have to chase. I want to trade at my price level. Funds I work with, they never chase, never. Price either comes to their level and they execute, or they don't enter. You either play at my level or I don't play at all, is what they're basically saying. And that's what I've learned from floor traders over the years, way back in the day. You trade at your price or you don't trade. A lot of people struggle with that. Oh, I've missed the boat. No, you haven't. If this stock's really going to go to 326 for a swing trader or 300, do you think there won't be pullbacks? Yes, there'll be pullbacks. And if you missed it, I don't mean this like flip it, whatever. So what? There's another trade coming. There's always more trades. There's more trades than the entire world can afford to make, guys. No one trader will ever run opportunities to trade. There's too many good liquid stocks out there. Okay. Does that help?
Yeah, it's great.
But it's definitely, this 280-ish right in that level. And you can see, guys, even when this thing broke down right here, it broke a key support, it retested that, then it fell apart. You can see the cluster here, it stalled out, came down, found support, now it's here. Eventually, if this is really worth pursuing, and I know they're in Meta and going to Mars and all this other stuff, and I mean, they're in everything, I get it. But you'll get pullbacks. You'll get profit taking. Let it happen and then take advantage of it. And so go for it. I mean, that's how I'd approach it. I mean, even this morning I was asked, do you see a way, where was it on here? You could get into this. And with what I teach you guys in traction, well, they all know, they're looking at this. This is roughly 276.42. You're risking just below around, I don't know, $1 there. And we're sitting where? 280 and change right now. And if I was going to look for a trend line shift and momentum on this one before the end of the session today, I'd be watching that trend line, because that's using key lows, not random, but very key. And so you can take that if you want to build a channel out of that really quick. and you can do some irregular charts, it would be that right there, and you're kind of in the middle of that range. It's just real straightforward, real simple. That's a 1 minute chart. You're like, my gosh, Scott, it really pulled back. Yeah, because it's really, really, really strong. And it's been pumped. I have yet to have a decent pullback on the 5, the 15, on this last run up, and there's a lot of strength on it. I also expect we're at the midpoint, but I would expect to have issues. What is this roughly? 285, 286, 87. So I would expect some issues around that. And that's a 2x2 structure. And that's just an area where I expect to find some problems. It doesn't mean the stock won't go higher. I just expect some issues. I do want to bring up one quick note. So people always ask, how do you project things? We clearly don't have time to go into that in this because it takes a while to teach all this. All the circles are transition points we've done in traction. The next one's been forecasted out is this afternoon, so you can see it. It is at 14:30, that's Central Time, to close that bar today. So you plus or minus a bar around on the 60-minute chart, give or take, we'll have another inflection, just like we had here, 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 here. That's the next inflection. And the next one's not till the 29th, if I recall correctly, something like that. And for those that saw Power Trader Live, I guess 2 weeks ago, the Bitcoin setup, that was the Bitcoin target, next target, whatever that number is up here. And that's all documented out, all the recordings and all that, but those were targets. Next one's up here at the very high, whatever that tick high is, 45,365. But you can see the reactions, and this is all geometric based. That's all geometry. But geometry's not for everybody. There's lots of ways to trade markets, guys. There's not one right way. I don't teach one right way because there's not. It's what works for you, but you need an edge. So I hope that's helpful. It's a lot of little loose ends, but I didn't want to get to the end of the day and not show you that. Does that help?
It's amazing. I love geometry. I have to be careful. I could riff on that for a long time. So you just finished the second class of boot camp. If people are in here and they want to jump into boot camp, can they still do that? Is the content sequential? I mean, obviously we'll get recordings in their hands.
So the way I do this is every single class I come in, we start with what was originally trend, and the second class brought trend and then support resistance like I showed you. Then we'll bring in the next topic, which will probably be like volume box. And what I'll do is I stack them. So I go back, I spend a few minutes reviewing the very first one, then I show the second concept, then we introduce the third concept, and it all stacks together like blocks or like a puzzle locking together. So if you have, you can pick up, you'll get a little introduction each time. You won't be behind. If you're super advanced, it'll probably be pretty remedial for most people. But if you're a little newer or need some refreshers, it'll be helpful. So yes, you can still get in, you can still join, you got time, and then you have the recordings to review that go with it. So absolutely, that's not a problem whatsoever. Man, the video's on fire.
Yeah, it is. I dropped that link in the Zoom chat and also on YouTube. Want to say hi to our YouTube viewers. You guys are awesome. We're about to cross 11,000 people on YouTube.
Sweet.
Isn't that cool?
That's awesome.
That's super cool. When you get the plaque, I want the plaque.
I want to say that. That'd be awesome. 285.39, guys, if you're looking. Okay. And then you have 291, 297. Please, sorry, Josh, I mean to break your train of thought with that. I just want to make this point. 280, 285, quarters, halves, and 3/4 holes. In the market, they're significant. So, if we were at 280 even, 282.25, 285, and you watch them start selling back off at those levels, it doesn't mean the world's coming to an end. They're just stacked a lot of targets go against that. And I did a course on this 2007, 2008. And my buddy Jeff, who's been on the floor and everything else, he said, I always knew this, and I taught it, and I was literally getting the depths of just reading like tape almost. And he said, I've always known these numbers are significant, but then you go look at the profile of the volume and they just spike. We were doing Apple in real time. You just see it just jam volume at those key numbers. And so if you know that and you're looking for targets, it goes back to what you guys were asking earlier. 1,000 is a big target number if it was Tesla, right? Well, 900 was because 9 is the most stable number in the universe, right? But when you get into these smaller fractals, if 25, 50, 75, 1, 10, 100, whatever it is, are big, important numbers, put your targets a few pennies, shave it. I call penny shave down your targets just below those so you can get filled, because everybody knows the numbers. So well, guess what? The orders are stacked there. And that way you can get taken out, or get out if you want to get your price point. That's a beast. The thing's a beast, and it's got a base coming out of it. Like I said, if you want a great day trading stock and you're comfortable trading something like this, it's a smooth moving stock. And if you want to swing trade it, without even buy, sell, hold, but I've given you some longer term levels. Again, you can mark those or screenshot that if you guys want to. Those are geometric based, and they work really well for any market in the world. It could be crude oil for like here, but they work really, really well. Does that help? I'm sorry. Just churning through what I'm thinking as we're going through this.
It's really
You may share more concept for everybody can learn from while we're here?
Yeah.
We should just relabel this stream the Scott Landers stream.
Sorry, I should stop talking. I mean, I feel bad, but I just thought of something because of NVIDIA. And so I teach wave counts. No, not Elliott wave. I do not teach Elliott wave, and I will never teach Elliott wave. No disrespect to it. I just won't teach it. There's enough people that do it. It's just not my cup of tea.
Yeah, even Elliott's confused by his own waves, so don't feel bad.
There's somebody else in the industry that I have a lot of respect for. And I remember listening to them one time and like something like this, and they're riffing. And they've tried it and they want it to work and they want it to work and they had their own systems, and it wasn't anti that. But they said, I never know where to start from. And that was their whole thing. And they're as a seasoned as I am. And I just smile, but it's not. And I get, guys, if I may for 1 second, I'm going to get to give you something tangible you can walk away from class today with that I've taught for 16, 17 years now publicly. But traders want, and I'm saying this respectfully because I want the same thing. It's like, hi, here's your calculator. Just push the button and go. That's what people want. They want it to just tell me what to do and I'll go do it, Scott. The problem is trading is like driving a car. My son, unfortunately, was in a wreck this past week. Totaled his car. Yeah, he totaled his car and the car in front of him. It was not good. He's okay. He's 18. You guys can just go from there. And he's okay. A little whiplash. Airbag did not deploy. He's going about 45 miles an hour, bumper to bumper, going to school one morning. And it just wasn't good. And so he's okay. I took him to lunch today. We talked some. You don't care about that, but I'm trying to get somewhere with this. People want everything to be a certain way. It's like handed to me. It just works. Well, I wanted the air flag to deploy. It didn't work. But at 18, he's still, he's a good driver. He wasn't texting. He wasn't distracted. But was he focused? And so how much gas, how much brake, how much distance between you and the car in front of you? When I was 16, it was for every 10 miles an hour, there's a length in front of you. How many of you honestly do that? Probably not a lot of you, because people pull in between you. 7 links, that's too much space. All right, here's where I'm going. We want to hurry up. I just want to learn it. Just quit all the nonsense, Scott. The problem is the lack of patience, the lack of time discipline that hurts most traders. So here's a tool. If you don't want to do wave counts, even though you do wave counts with this is what's called higher candle close. It's called HCC, LCC. It's super simple. But every time we've tried to teach this over the years, even when I taught it with my buddy Jeff, he's like, let me teach it. People get confused. I color code it to make it more obvious. Now I'm going to break this down. Just bear with me a minute. Have you ever bought a stock and it goes red and you're like, oh, I got to get out? Higher candle close is a most bare bones basic concept. And like, okay, Scott, what is this? Show me something so I have something to work with. So I'm going to turn this off. Okay. And this is a 15-minute chart. When we're looking for higher candle close, lower candle close, it has nothing to do with how your color of your bar closes. Do you understand me so far? So what I want you to do, okay, where would I be coming out of this trade? On this bar. If I'm scalping morning, 15 minutes, whatever it is. Why? Because that's actually the first lower candle close. No, it's not, Scott. There's one here. There's one here. There's one. Correct. HCC, LCC. Close. Does this bar close below the low of the preceding bar? No. Do not exit. See it the whole way up. When do you actually have price close below a preceding low? Once you have that, you could scale or you could exit. Boom, you're done. The reverse is true. Over here, closes below. When's the next close above? not till this bar. So if you short a little breakdown right here, where's your first higher candle close? That's the high, 259.44. What's this one? 259.65. That's a higher candle close. Okay. So at that point, come out. Meanwhile, I have lower candle closes. So it's HCC, LCC. So what I did to help people, and if you can program, you can go do this logic, but it will keep you in trades and take out of a lot of emotion. This is set to the 15-minute. Notice it lines up, but when I have a red bar, it's yellow. Like, pay attention. And so you can also do wave counts with this. There's wave 1, there's wave 2, there's wave 3. Oh, look, it's right there. I'm not telling you always get 3 waves or whatever you can get. I'm trying to tell you the logic can help you scale. Most traders, I saw something in print from 50, 60 years ago. The hardest thing for a trader or an investor to do is stay in a winning trade. This is before I was born. So you see it. It's just like, let it play out. Well, this morning, if you scaled, let's just assume you bought through the breakout of resistance right here. Pretty logical, right? I mean, you could see it breaking. Well, okay, scale some off. Use your 50 fib retracement as a place another uncle point at that point. Better yet, if you think it's super strong, use that weakness to buy back through that high and risk that low. It's that straightforward. People say, oh, it's easy in hindsight. No, because I have rules that tell me to do this, and my programmers could testify about that, and so can Trader Traction. Keep it super simple. There's not a whole lot in this chart. My target this morning was 279.5. Well, 53, whatever it is. And that's a geometric target. The next one's further above, as we've seen. So this will work on any time frame. The higher close, you could do it with, you know what? Let's just do one more with this. Let me go to Costco. I know Josh loves this one. Let's go to the monthly chart just to show you the power of what you have here. Now, this is the monthly. I'm going to turn off the data off of this so I'm not misleading somehow, and I've just missed it and changed all that. But this is custom. Zero, Scott. Misleading anybody with this when you see it. This is the monthly on Costco. Now, realize how far back this goes in time. Okay. Look at this string. You break the highs. Okay, what's that? Roughly $46. Okay, when's the first lower candle close from 47? Just the breakout, logical breakout. 93. There's no interpretation here. There's not me fiddling going, oh my gosh, it pulled down, blah, 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 blah. So if you're an investor, the concept works. The difference is you don't have to have it color coded to do this. I mean, I can turn off the color code. But I did that to help you guys see this, to expedite this in class today, because I want you to see how it looks, right? Look at this part right here. Broke out, right? Let's analyze this. Okay. See the close? See the close? See it's above that low? See that close? Still above that low. It's not a lower candle close. Where's the lower close? Keep coming up. Right there. But yet, how much pain and anxiety you go through for that 3 weeks or 3 months or whatever it is. And I understand if you trade options, I get all what you can go through. I'm trying to show you. So whether you day trade, micro scalp, flash scalp, the concept works. But it takes out your behavior, because a lot of times in a strong trend, those 2 or 3 bars of weakness is nothing more than a reversion or a slight retracement that you should be actually looking to buy going back in the direction. But I've taught this for a long time. It's super powerful. You can code it if you want to code it in your systems. Does that help?
Yeah, I immediately went to Jets because you and I had this conversation about how I could have stayed in that trade longer. It's interesting. I'm just kind of playing around with the time frames that I would have needed, because that was really a swing chart. Yeah, so I got out right after March there. I'll tell you the date. It was March 1st. First day of March. But then, you know, we had that freaking, what do you call them? It was a rock wall. No, that was a waterfall.
Yep.
And I would have had 400 to 500% return on that trade.
So this is Jets, right? This is the one. So look at the cascade. Look where the first higher close is. And if you have something, guys, where you're worried about it, you know, is it going to go back lower or whatever, you can use the high of that bar once it closes, not kind of slope and this extreme slope. Use that bar, set your stop. Do you notice where they open reverse from? See the matchup? Okay. And what you could do if you think it's starting to slow down momentum is then on further weakness, continue to scale the position, and drop to a hard stop after that. And right now, there's not a lower candle close in the way back up right now. But we talked about this in one of the prior sessions. We talked about if somebody's long into this, there's a lot of resistance right here, right? We can see that looking left, just like I taught in boot camp. You can see it. It's also about midpoint of this. It makes sense if you're long this with that momentum, you're losing what on your options right now? Probably some premium because of time decay, because it's not accelerating. So that's why we look back at this, when we look at the recording, we can talk about this again if we need to, but we talked about this being an area where you probably want to think about, without buy-sell advice, if it was me, yeah, I would have gotten out of that,
I told Muhammad straight up, are you in here, Muhammad? I told him straight up to, you should probably get out of that call option. He made money going down and up. I was super proud of him, but yeah, that would have been decaying. The theta decay on that would have been exponential.
Look at Apple currently. Just so everybody can see this really quick. Everybody go do this. There's no lower candle close, but yet emotionally is it stretched? Of course it is. But that one simple rule, whether it's this way or in video, whatever, and you're trading momentum, you can use the concept. In fact, let's just do this more and I'll be quiet. There's the weekly on all holders.
Go back to Apple. Why was that candle yellow at the end?
Is that a 1 minute?
Oh,
hang on.
Daily, sorry.
Was it the daily? I don't remember which one I was on. I'm sorry, Josh.
I think it was the daily, but I might have misread it. Yeah.
So okay. So,
go ahead.
But currently, we need to get to the end of the day to know for certain how it's going to close. So right now, we don't know how it's going to close yet because we're still in the middle of the day. Every bar colors
yellow until it closes.
Yes, sir. And that's the way I've got it. It's the way it's coded. Somebody could do it differently, and they could do a relationship. Well, if it's above the green line or whatever it is, something like that. But I won't know the confirmation of how the bar closes until the bar day, week, or month is going to close, because we can't know that yet. I wish we did. That'd be awesome, but we don't.
Let me double check just to make sure I understand the logic here. If I'm going to go program this into my own chart. So
I'm already programming it.
Color for the candle is based on if the close of the current candle is above the high of the previous candle, then it's green. If it's below the low of the previous candle, it's red. And if it's neither, then it's yellow. Is that right? Okay.
That's right. Cool. Right. And the other part of that is, though, you could still have the yellow bar could be where it closes. Here's an example of this. This is that bar right there. You know what? Let's just take the code off, Scott, so I don't mess you guys up with that. So on this one right here, it's yellow. The bar closed green, but it closed back above the low of the bar. So it's not confirming that it is a lower closed candle at that point. Okay, does that make sense? In other words, you closed below the low of, that was the low of this bar, which was 172.12. The close of this bar was 172.39. So the reason it's indecision is because, well, you don't have confirmation, but it's also not still closing higher, so it can't be green. So the yellows are indecisive because, well, they didn't close higher than the bar. I know it's a little backwards people's heads until you realize it really can structure your wave counts and the closes. But if you're trying to program it, it really is that relationship. So if it's indecisive, it will be yellow because it has to either close above the prior bar's high to be green or below the prior bar's low to be red. Anything else other than that will be yellow.
So are you making any decisions when you see a yellow candle? Sorry, Josh. Or are you just looking for the reversals at the red candles, red and green candles?
I'm using it. It depends on, it's not the only factor I'm going to look at clearly, but it's more of a mental speed bump. But I'm going to look at it and I might raise a stop because of that decision. It just depends on how strong the slope is. So that would play into it there.
Cool.
Does that help?
It actually kind of riffs on the conversation we just had in group coaching with those open candles that have different colorations based on where they open or close compared to the previous day's close.
Yep.
So, that example you just pointed out there, that would actually have been a red candle in that hollow candle setting with a white body, the way I have my chart set up. And so what Scott's saying is instead of red, he's coloring it yellow because, well, it didn't violate the low of the previous candle. It still did close lower than the previous day's close. So instead of red, it would be yellow. Do I understand that correctly?
Yes.
Were you in group coaching for that when we were talking about that, Scott? You might
I
have come in after that.
I think it came in after that.
Yeah, that was near the beginning.
Yeah, I was. So just to give you one more thing with this. So this is a 5-minute chart. Scott, stop. Now you're like, what in the world is this? What I've done is I'm looking at this.
I'm ready to cheer for Brazil. That's all I know.
What that actually is right there is a 5-minute chart, but the bars are colored to a 60-minute. Follow me? So that's 60 minutes. So that's a 60-minute run, whatever it is. You know, it may not break exactly. It depends on how the bars close in 60. So I can see multiple fractals, just like multiple time frames. I'm sorry, multiple moving averages to represent longer time frames. With this, I could do that on any kind of time frame. Like it could be a 1 minute I'm showing right here, and I'm still looking at the 60-minute data. So if I knew I had a whole bunch of time frames here that were super bright green or whatever it is, and I see weakness on the 1 minute, but I got strength on the longer term, am I going to buy that? Yeah. So let's just look at NVIDIA with this, just to give you a comparison. See NVIDIA on the hourly?
I'm totally geeking out on this with you.
Do you see the, I mean, wow, what a really nice retracement of that. So this is the 1 minute, right? Breaks out. There's a retest of support. Nice look up and handle, breaking out, right? But if I know I have this kind of strength playing out on a 60-minute bar, would I not buy dips? I mean, why wouldn't I? This is where a lot of traders struggle. It's like, I don't know if I should get in or get not. If you're trying to go higher, why would you not look at buying the dip? Don't answer that by saying, oh, if it keeps going lower, bear with me. At a logical place or after a multi-wave countdown or at a fib number, whatever you're going to use, and then take it back in the direction of momentum. That was the whole point of momentum with updraft, downdraft that we talk about in the momentum classes. It was designed to bail you out of Scott's stupidity when I was trading at that stage of life. Like, just show me that it's going to try to pull itself back out of it. And sure enough, it would pull back up or pull back down, depending. But once you understand that you have to have higher power time frames, that's the big wave, right? So I'm 6'7". I have 3 kids. When they were like 5 and 6 years old, you should see me in the grocery store, a big box retailer. And it looked like a bunch of little cartoon characters just trying to chase, like flying through the air, chasing me because I'm 6'7". I got a really long stride. So they're like following in my, in the wind of dad. It's like trying to run to catch up, their little legs going. The market's the same way. I'm the big wave. Here comes the little waves. They're trying to follow my footsteps. The same thing with the market. You have this big wave that energy is going to keep pushing and then push back, like pushing forward. You want to catch that wave. I don't be on the other side of the wave. I body surf with the energy, not on the other side of it, because, well, the wave's going this way and I'm supposed to go with it, right? Logically. And for some reason, traders, we put money in a position and we go brain dead. As you talked about, these dopamine hits, your phones, you guys understood the endorphins and dopamine, all these things that you go through. You know, I heard something the other day about this, and I'll make this part quick and I'll get out of the way. I saw this was actually a social media thing, and it was somebody who had struggled with addiction and like a chemical addiction. He said, tell y'all what, you understand what it's like to have an addiction? He said, go put your phone down, put it down. And every time you go touch it, realize you can't go touch it. And he said, hide and see how addicted you are to your phone. And he's not wrong, because we depend on these things. I tell all my traders, you are not allowed to look at this in the first half hour of trading if you day trade. Turn it off, throw it where you can't hear it. I don't care. Lock and load in your chart because they are super distracting. Anyway, there's my PSA. Sorry.
So good. I mean, we're hitting the time where we need to kind of wrap things up here, but I took notes today. Anybody else take notes in YouTube type of comment in or Zoom type of comment in?
I'm definitely going to go try the color coding and try that out in Thinkorswim. I like that a lot. That's cool.
Hey, would you send me your algorithm when you do that?
Sure.
Thanks. If you don't mind waiting 2 months, I'll have Caden program it for both of us, but I know my place in this world. Check the divorce rate over cell phones. What? That's terrible, sorties. Well, it's not.
The #1 contributor to divorce in the country was Facebook. Over some period of time, they said like that was the #1 reason for divorce in this country was related to Facebook because of old high school fling from 20 years ago and, whatever. They were the number one contributor to divorce in the United States of America. I don't know globally, but the US they were. There's your levels on the video if I want those for down the road. You can play with it and all that kind of stuff. I know we got to wrap this up. And one more look at Bitcoin if you're curious how that looked. But these are things we do in Trader Traction, guys. We get into, well, not this particular piece of code, but other things that I can use to show you that, there is a turn coming. Where is it? Well, there's Pink Panther, as Raymond calls it. He loves that silly line. But these are your next two inflections if you're curious. This is it. 1430 day central. So last half hour, plus or minus a bar around it. And then there's the one at 9:30 closing on the 29th. So there's that. All that's been documented out for for weeks on end. So there's that. All right. I'll leave it alone. Anything else?
Amazing.
Does that help?
No, it's amazing. Thanks for coming on the show again. You're always welcome. You're always a favorite. I think everybody should be signed up for boot camp at a minimum. And as you go through that boot camp registration process, there's an option to join Scott at a more intimate level with the Traction group. And that's limited to just 30 people. It's very high touch, very interactive, very community oriented. I think that of all the groups that we have here at TSU, that group has stuck together the most. A few people come in, a few people leave every quarter, but for the most part, the nucleus has been staying the same. So I think there's a couple seats left if you guys want to grab those. If you want to talk to Scott about whether it's a good fit for you, I'm sure he'd be glad to hop on a telephone call. But I can't recommend more strongly. I don't like it when people say it that way because it sounds like I can't recommend. I highly recommend, to the greatest extent possible, taking Scott up on the offer to work personally with him. I've done this for 25 years, guys. And I'm taking notes today. I'm like, that is such a simple way, but effective way of staying in trades. It's one of the things I'm working on. Burgess will tell you. I just was messaging with him. I'm like, dude, my win-loss ratio is epic. Let's put it up against anybody. But I'm not letting my winners run anymore. And I'm like, this is that. That was worth the price of admission for me today, Scott. Which I guess isn't saying much because it was free for me. So it was worth at least $100,000.
Yeah. On that note, I haven't been keeping on top of this like I usually do, but if you're watching on YouTube, getting all this free info, yeah, the cost of this is for you to drop a like on the video. It's really not that much. You get all of this. This is stuff that people are paying a lot of money for. You're getting it for free. The least you could do is drop a like on the video. We appreciate that. Helps the algorithm. You know the deal. So definitely drop that like. Thank you, guys.
Josh, one thing
like
we
and
go.
Subscribe and hit the bell.
Just real quick for everybody. This is the broader market watch 4 charts. This is something I've taught for 2 decades solid, whatever it is. I just want to make one note. I know Josh loves fibs, right? We all know Josh loves fibs. So I just want you to look at your chart for a second here. And I want you to look at yesterday's action, today's actions. And we talk about, don't do that, Scott. Seriously. Don't. Now, does anybody see anything bizarre about the action today? Which one of these does not look like the other? Anybody want to guess? Somebody puts up in the chat. Which one does not look like the others? Which one's a laggard? Which one's a leader?
I'll bite and say the Qs are the leader.
Which one's a laggard, guys?
Russell 2000.
Yep. Why is that, Chris?
Hitting major resistance there, looks like.
Look at the relationship to the past 2 or 3 days. The NASDAQ's taking out 3-day high right now. The SPYs are getting closer and closer. And then the diamonds are trying to get through yesterday's high. But which one hasn't gotten through the midpoint, basically, of yesterday's, from the high to this morning's low? Which one can't seem to get through there? I bring this up because this is the one thing my students from literally 2 decades ago still use this day. So Josh puts his indicators on there. He puts the 4 market watch charts up there. It is the ETF versions of this. Now look at the relationships. You will find divergences. The reason I stress this is if you're in a NASDAQ day trade call room and all you look at is the comp or the triple Q, and you wonder why sometimes you guys get slapped silly by the market, is because you don't see the other 3 key markets around it. You could do MDY with this. I look at it on occasion, but just these 4. I've documented out in all 3 traction groups. I only bring this up as I don't care what indicator pack you have. If you day trade, tick charts, whatever it is, match it to what you're doing and what the market's doing. That's one. If you invest, same thing, go to longer term charts. This is just a simple sample of this. But you will find divergences, and I've documented on all 3 traction groups, and we'll find when things are starting to turn. We did it yesterday in class. Literally looking back and forth between the stocks we're looking at and the broader market. This right here will be the best exercise, and it's the one thing that I have students from 2 decades ago that still use. It's like the one thing, it's like I'm never not going to use this. So play with it, see if you don't find, some advantages, your MACD divergences and all that with it, but it will wake you up. Because the example I've always used, if mom, better yet, if Josh, his wife, and I don't know, let's say Caden, they're walking one way, and one of Caden's friend, maybe his girlfriend's walking the opposite direction, and she takes her hand and breaks loose. Well, one of them's got to go get her and bring her back. I don't know why she would do that. Doesn't matter. The point is, when the markets all walk north or south, you tend to get better movement in your underlying stocks because it's 70% of your stocks movement. Okay. If one of them's going south, and the other 3 like, what are you doing? Where are you going? And we got to come get you. So rotation, you'll see rotation in the market with this. It will open your eyes to a lot of things. We could talk about some other time, but I just wanted to put that in front of you guys because we talk about this in traction and in boot camp. That's it.
We'll save this to next time, but I'm a big advocate of adding the semiconductor index to all of this too, because semiconductors are so prevalent throughout everything. I mean, they touch what it is. It's capitalization size agnostic. It doesn't care if it's in the IWN, which is small, IWM, which is small cap, or if it's a mid cap, or if it's a large cap, or if it's Amazon, or if it's whatever that mining company was we were looking at earlier.
Yeah.
So I know a lot of very smart people are watching. SOX is the one of the semiconductor indexes that's most popular. We'll leave it there. I have more questions for you, but we'll turn this into a 2-hour event. And actually, I've got to take my daughter to an appointment. So I did not know about your son's accident, and I do care, contrary to what you said. So prayers for your son and navigating, 18-year-old hormones and figuring all that out. And I'm really, really glad that he's okay. So thank you, Scott, for joining. Get signed up for boot camp, get signed up for traction, get signed up for the YouTube channel so you guys can continue seeing great content like this. We're unabashedly working to grow it. We want to get the message out there. I don't know if I've shared this on the YouTube channel or not, but I believe, and our ethos at TradeSmart is that when good people have more money, they can do more good things. And I've spent 13 years now at TradeSmart surrounding myself with good people. That's why you see Scott Landers here, one of the best dudes I know. Same thing about Chris Burgess, 2 of the best dudes I know in this market. Alfonso's the same way. Valerie's the same way. And if you guys want to have certainty over the caliber of human being that is working with you, they're not scoundrels. They're doing what they say they're going to do. They're not pumping and dumping. All that exists out there. And I'm just grateful for the environment here at TradeSmart. And if you'd help us get the message out, I'd really appreciate it. So today we'll go Chris, and then we'll give Scott the last word since he was the one that dumped the most value on us all today.
All right. Well, I can't follow that up, so I'm just going to say thank you guys for watching. We'll give Scott the last word here.
I mean, you could have said nice things about me. I'm just saying. Like...
yeah, Josh's a pretty good guy too. We have a lot of fun with these shows. I'm glad we're doing these.
Chris, tell him turn the hat around again. That worked really well.
God, yeah.
Yeah, and then shave the beard off.
I'm renting a flipping tuxedo for next week. You guys are going to be dwarfed.
Chris and I are going to dress down. We're going to go.
There's a whole subplot going on here, isn't there? I swear, if there's a private chat between you guys.
I don't know what you're talking about. Rebecca's the one that's the glue that holds it together, Josh.
Yeah,
she is amazing. Oh, she's listening on. Thank you all. If somebody's got questions, needs to reach out, just go through TSU and let us know. And if you talk to me about what we're doing with traction or boot camp, we're happy to have that conversation if that helps anybody out. But meanwhile, I hope you got some value. Appreciate Josh and Chris and just the opportunity to be here and be a part of this is always a true pleasure. And forgive me, guys, I don't make eye contact. I'm usually staring at charts, all the monitors, and I'm just like focused on trying to get you value. But thanks for the day, guys, and y'all have a